You've probably heard that long-term care insurance is a use it or lose it deal, right? It's the main reason most people just say, no, thanks. But what if that wasn't the whole story? What if there were ways to share benefits with your spouse, inflation-proof your coverage, and even guarantee your money never goes to waste, even if you don't end up needing care? Today, we're pulling back the curtain on the long-term care insurance features that companies don't exactly shout from the rooftops. The secrets that could save your family a fortune. Let's be real for a second. The cost of long-term care is astronomical, and it's climbing every year. Statistics show that someone turning 65 today has almost a 70% chance of needing some form of long-term care down the road. Trying to pay for that out of your savings could wipe out everything you've worked for in just a few years. And spoiler alert, Medicare won't cover most of it. This isn't just about covering medical bills. It's about protecting your life's work and your family's future. The biggest hesitation people have with traditional long-term care insurance is the fear of paying premiums for decades, only to pass away peacefully in their sleep, never having used a dime of the benefits. Poof, the money is just gone. This is where hybrid policies come in, and they are a total game changer. These plans combine long-term care coverage with either a life insurance policy or an annuity. Think of it as a financial multi-tool. If you need care, the policy pays out. But if you never use it, your family gets a guaranteed death benefit. No money is lost. This is how you tackle that use it or lose it problem head on. Plus, while traditional policy premiums can sometimes go up, the premiums on most hybrid policies are fixed, meaning they're guaranteed not to increase. Now, there is one critical thing to know. While these hybrid plans solve one problem, they often don't qualify for the same tax deductions as traditional policies, which we'll get to in a bit. For couples, this next secret is brilliant. It's a feature called a shared care rider, and it lets you and your partner pool your benefits together. So, instead of having two separate 4-year plans, you can create one big 8-year pool of coverage that either of you can dip into. This means if one partner needs 6 years of care and uses up their share, they can simply start drawing from the benefits left in their spouse's part of the pool. It gives you this incredible flexibility and a huge safety net, basically letting you double the coverage for the person who needs it most without having to double your premium. It's one of the smartest ways for couples to protect themselves. A policy that pays out $200 a day sounds pretty good right now, doesn't it? But what will that $200 be worth in 20 or 30 years, when you're actually likely to need it? Without some kind of protection, inflation will quietly eat away at your policy's value, leaving you with a huge coverage gap right when you need it most. This is why an inflation protection rider isn't just a nice add-on, it's essential. This feature automatically increases your benefit amount every single year, usually by 3% or 5% compounded, to keep up with the rising cost of care. Yes, a policy with a good inflation rider will cost more upfront. But a policy without one is a policy that's designed to fail, losing a little more of its power every year. This is the engine that makes sure your plan can actually do its job decades from now. This tax benefit is for tax-qualified, traditional long-term care insurance policies. Those hybrid policies we talked about earlier? Most of them do not qualify for this benefit, so it's critical to know which type of plan you're considering. For a qualifying traditional policy, you can pay for your premiums right out of your HSA. That's money that went in tax-free, grew tax-deferred, and now comes out tax-free for a qualified medical expense, your insurance premium. The amount you're allowed to use from your HSA increases as you get older, giving you a powerful triple tax advantage that makes funding your coverage much more efficient. Knowing these secrets is the first step. The next is figuring out how they fit into your life. Hybrid policies, shared care riders, and inflation protection are powerful tools, but the right combination is different for everyone. Take a look at your own financial goals and what you want to protect. We've put some links in the description to help you get started, but we always recommend talking to a qualified financial advisor who truly specializes in long-term care. Planning for long-term care feels complicated, but it doesn't have to be so scary. When you understand these features, you stop being a passive buyer and become an informed planner. You can build a strategy that doesn't just protect your health, but protects your savings and gives your family peace of mind. Don't just plan for a long life, plan for a secure one. You are invited to subscribe to Camaraderie Health Agency YouTube channel or go to www.camaraderiehealthagency.com or call 224-433-5754.